Ever felt like the market is a wild roller coaster? Well, you're not alone. Let's uncover the wisdom that could potentially turn that roller coaster into a smooth ride. Join us on Wealthway as today we're diving into the secrets of the stock market with The Little Book That Beats the Market by Joel Greenblatt. Stick around because this is not your average stock market talk. Hey, before we dive into today's content, make sure to hit that subscribe button and ring the notification bell so you never miss an update from our channel. Takeaway 1. The madness of the markets. Picture this. You're eyeing Amazon stock, thinking you've hit the jackpot at $1,377, only to see it skyrocket to $2,012 within a year. That's the wild world of the stock market for you, filled with surprises, shocks, and a dash of drama. It's like a high-stakes poker game where the stakes are not just dollars but the fate of your hard-earned money. The madness lies in the market's tendency to overreact, sending stock prices on a roller coaster ride that can make your head spin. But fear not, because we're not here to just marvel at the market's theatrics. We're here to uncover the strategies that will turn this chaos into an opportunity. Now, you might be wondering, is this market madness a one-time thing? Well, not quite. Take Gap, for instance, America's fashion giant. In a span of months, you could have snagged its shares for $18, only to see them dance up to $31. Did Gap suddenly become a fashion sensation overnight, selling 70% more clothes than before? Nope. It's a classic case of the market not quite knowing what it's doing. So, what's the key takeaway here? The market is like a pendulum swinging between extremes. And if we can understand this madness, we might just find a way to ride the waves rather than be drowned by them. Takeaway 2. How much is a business worth? Let's dissect the intriguing world of valuing businesses in our second takeaway. How much is a business worth? Picture the market as a lively auction swinging between moments of enthusiasm and sudden panic. Deciphering a business's true worth in this chaos may seem like cracking a cryptic code, but fear not. We've got PE, price to earnings ratio, and ROA, return on assets, as our trusty guides. Think of PE as the market's heartbeat, indicating how much investors are willing to pay for a company's earnings. A low PE suggests a potential bargain, while a high one may hint at overvaluation. But our toolkit isn't complete without ROA. This metric unveils a business's efficiency in turning assets into profits, like checking if your car can go the distance on its fuel. Armed with PE and ROA, we navigate the market's battleground, distinguishing between overpriced knights and undervalued heroes. Takeaway 3. PE and ROA. Alright, buckle up for our third takeaway. PE and ROA, the dynamic duo in the world of successful investing. Imagine them as your golden tickets, opening the doors to financial success. So, what's the magic behind this winning combination? Well, let's break it down. Firstly, we have PE ratio, the unsung hero in the investment arena. It's like the market's temperature gauge, telling us how much investors are willing to shell out for each dollar a company earns. A low PE is akin to spotting a great deal in a high-stakes poker game. It's your winning hand, signaling that the market might be undervaluing the company. Now, let's talk about ROA, or return on assets, which reveals how effectively a business turns its assets into profits. It's the secret sauce that separates the contenders from the pretenders in the investment arena. Combining a low PE with a high ROA is like holding a royal flush in poker, a rare and powerful hand. It's about strategically playing the numbers game. And in the world of investing, these numbers can be your guide to making savvy decisions. So grab your chips and join me as we explore the exhilarating world of investing, where knowing your PE from your ROA can lead you to the winning table. Takeaway 4. The magic formula. Welcome to the enchanting world of takeaway number 4. The magic formula. Joel Greenblatt, the Wizard of Wall Street, has something up his sleeve. and it goes by the mystical name of the magic formula. Imagine it as a spellbook that combines the essential elements of quality and price in the stock market. Now, before you start picturing wizards and wands, let's break down this magical concept. The magic formula works like a compass guiding you through the vast landscape of stocks. It's not about crystal balls or predicting the future. It's about finding those hidden gems that others might overlook. Quality, in this case, is measured by a company's return on assets, and price is evaluated through the price-to-earnings ratio. When these two forces align, you're not just investing. You're conjuring a strategy that could potentially unlock doors to financial realms you never thought possible. Think of it as having a treasure map in the stock market jungle. Follow the formula and you might just discover the buried treasures of undervalued stocks. So grab your wizard hat and join me as we delve into the magical world of the magic formula, where financial alchemy meets savvy investing. The results? Prepare to be mind blown. Takeaway 5: Step-by-step instructions. Now, let's cap off our journey with takeaway number 5: Step-by-step instructions, your roadmap to financial success. It's like having a treasure map with a big red X marking the spot. So, how do we turn theory into action? Well, I won't keep you in suspense any longer. Step 1. Your starting point in this treasure hunt is magicformulainvesting.com. It's your portal to Joanne Greenblatt's enchanted world of the magic formula. Once you've set foot on this digital terrain, step 2 is choosing the company size. Go big. 50 million or more should do the trick. This is where the magic happens. Follow the instructions on the site like whispers of a secret incantation and witness the list of top-ranked magic formula companies materialized before you. Now comes the exciting part. Step 3. Pick between 5 and 7 of these companies, investing 20% to 33% of the capital you intend to put to work. Repeat this ritual every 2 to 3 months until your treasure chest is filled with a diversified portfolio of about 20 to 30 stocks. But remember, wielding such financial power comes with great responsibility. Before embarking on this quest, take a moment to assess your own situation. And just like consulting a wise wizard, seek the guidance of a financial professional to ensure your financial journey is both magical and prudent. It's not just about amassing wealth. It's about doing so wisely, ensuring your financial story is one of success and not a cautionary tale. So there you have it, the little book that beats the market, summarized in a nutshell. The market might be a bit crazy, but armed with the right knowledge, you can turn the tables in your favor. Dive into the magic formula, follow the steps, and who knows? You might just discover the enchanting world of profitable investing. Thank you for tuning in to another insightful episode of Wealthway. We trust that the strategies and insights discussed here will help you on your financial path. If you found this video helpful, please show your support by giving it a thumbs up and subscribing to our channel for more wealth-building content. If you have any questions or want to share your thoughts, drop them in the comments section below. Until our next rendezvous, continue your journey towards financial success. And always remember, your wealth is within reach.